In Q3 of 2025, Rivian reported that the company are, finally making a profit. They reported a consolidated gross profit of 24 million US dollars in Q3. That's a huge milestone, showing the company is finally making money on the sale of its vehicles after accounting for the cost of goods sold. However, despite the gross profit, the overall company net loss widened to 1.2 billion in Q3 2025 due to massive ongoing investments in R&D, vehicle development, the R2, and scaling operations. Sounds good, right? Sounds great. Making a profit. But this is a false flag. I'll explain more why now. In the last month, Rivian's stock price has gone up around 30%. What's going on? Why is Rivian suddenly worth 30% more than what it was 1 month ago? Well, honestly, that's actually a really good question. If you know the answer or you think you do, let us know in the comments. But here's what has happened recently at Rivian. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Rivian's stock price, right? Look at this number here. Just on the 4th of November, it was sitting at $12.50. It then rose to $16 a few days later, about 5 days later. And that's an increase of, in fact, more than 30%. That's actually a huge increase. Now, you'd think that something really positive must have happened for Rivian. But the main news was this, right? There was a couple of news articles. The main thing was this. Rivian board gives founder and CEO RJ Scaringe a new pay package worth as much as 4.6 billion. Now, Rivian haven't made a profit yet, not even close. But the CEO is going to get a pay package for 4.6 billion, and it seems the market likes this. The board of Rivian has introduced a new pay package for the American automaker's founder and CEO, incentivizing him to stay on target and maintain growth over the next decade. The curious part about this is that's assuming Rivian is still around in a decade, because they're not selling all that many vehicles right now. If it comes to fruition, though, Scaringe's revamped pay package could be one of the biggest in the industry. In fact, one of the biggest in history, I should say. Rivian, although, they're kind of a well-known name in the States, doesn't really sell that many cars. Now, the American EV automakers' financial reports have been kind of improving. Its Q3 financials detailed an increase in deliveries, though not by much. Revenues and gross profits were up as well. Now, Rivian, though, did deliver only 13,200 vehicles in that 3-month period. And EV incentives have ended now. So 13,200 was pretty good. That's about what? 4,500 per month. That's worldwide, though, 4,500 per month. That's like Ferrari level numbers, yeah? It's not that much. And I'd say that, considering EV incentives are over now, that these numbers will probably go down. If they sold cars outside of the US or, significant countries outside of the US, then they could insulate themselves from US politics to some degree. And what I mean is this, right? EV sales worldwide this year, right? The first 10 months of this year grew by 48% worldwide. 48%. If you actually get rid of China, Europe, and North America, there's a 48% growth figure. Now, EV sales in Europe grew by 34%, in China by 23%. The US EV sales have barely moved the dial, 4% increase. So that's the risk here with Rivian, and I think investors probably aren't recognizing that fact. Anyway, Rivian's full financial report and letter to shareholders showed that in Q1, they delivered 8,640 cars, in Q2, 10,661, in Q3, 13,201. Revenues, right? Revenue was 1.56 billion of consolidated revenue. It's growth of 78% year over year. 1.14 billion of that was from automotive revenues, plus 47%. 416 million was from software and services revenue. That's a lot of money from software and services revenue. That's a 324% increase year over year. Gross profits, 24 million of consolidated gross profit. 416 million year over year. $130 million of automotive gross profit loss, though, plus 250 million year over year. And 154 million software and services gross profit, plus 167 million year over year. So, snapshot. In Q2, Rivian lost 1.1 billion. In Q3, Rivian lost $1.17 billion for a total of $2.3 billion lost over the past 6 months. Yet, in spite of those numbers, to be honest, kind of looking a little stark to me, Rivian stock has gone up by 30%. In response, it would appear, to the CEO getting a $4.6 billion potential payout. Now, if you go to Electric, you'll find what looks like a paid-for puff piece that talks about the CEO and his childhood and all his experiences that he had as a kid growing up. The company was originally founded as Mainstream Motors in 2009 by Scaringe himself, an MIT grad who studied engineering and lean manufacturing. Scaringe grew up in Melbourne, Florida, where he would work on cars with his neighbour and spend much of his time outdoors hiking and exploring. He was a wonderful young boy. No, they didn't say that, but anyway. As Scaringe grew older, he found himself driving miles into nature to hike and became aware that he was contributing to the pollution of an environment he looked to preserve. As a result, the company was born. What a hero's journey story that is. Flash forward to today, it says Electric, and Rivian is currently selling its second generation R1S and R1T EVs, as well as a new flagship model called the R2, which is due in the first half of 2026. Aside from helping battle climate change and provide consumers with dependable and rugged alternatives to traditional combustion pickups and SUVs, Rivian's CEO does have to make a living, and he has a pay plan in place. Poor guy, he's got to make a living. He needs $4.6 billion for sure to make a living. It's necessary. Rivian's board has announced a revamped plan with new and potentially more realistic milestones that could pay its CEO and founder very well. As reported by Reuters, Rivian's board has decided to nix CEO RJ Scaringe's current pay plan, which it said would likely not be met. It wasn't fair on him, they said. Instead, Scaringe's future as Rivian's founder is secure through a new plan, complete with lower goals regarding share growth. The board also voted to double Scaringe's base salary to $2 million. So he makes a lot of money every year and could potentially get $4.6 billion as well. According to a filing with the SEC, this new plan grants Rivian CEO options to purchase up to 36.5 million shares of the automaker's Class A stock at an exercise price of $15 per share. Reuters notes that the purchase option involves approximately 16 million more shares than the previous grant awarded to Scaringe in 2021. According to the new payment plan, the CEO's award will be realised if Rivian achieves reduced stock price milestones, which range from $40 to $140 per share over the next decade. That's a more manageable number compared to stock milestones in the now defunct pay package that required Rivian to reach a share price between $110 and $295 each. Other required milestones include operating income and cash flow targets over the next 7 years. If Rivian hits all the milestones in this revised package, its CEO will rake in up to $4.6 billion, while shareholders will gain $15 billion in value. This news is interesting, says Electric, because shareholders recently approved an astronomical pay package of $3 trillion for CEO Elon Musk, which is all kind of electric nonsense. Musk could get $1 trillion, right? Not 3. He could if Tesla hits milestones that are 100 times less likely to occur than Rivian's. In fact, they're just so unrealistic that Elon Musk is basically going to work for free for 15 years, I've worked out. 15 years. So thank you, Elon Musk, for believing in your abilities beyond reason. Let's be fair. He is. Anyway, it's great for Tesla shareholders because I'm sure he'll work hard to try and achieve those unrealistic target numbers. So Rivian's stock price appears to have gone up because the CEO is so confident that he can hit these numbers, which have been revised downward. Numbers are revised downward significantly by more than 50%, and investors love it. Share price is up 30%. To me, this is hysteria. It doesn't make any sense. And personally, if you've benefited from this, now's the time to sell, because Rivian won't be around as we know them today in 10 years. Like, another company might acquire them, but their cash will run out. They can't burn cash at this rate for 10 years. It's not going to happen. They're not selling anywhere near enough cars to stay in business 10 years from now. It's simply a fact. And if you disagree with that, I understand, but you're disagreeing simply on your own emotions, not on facts. The facts are you cannot spend this kind of, you can't be losing $1.2 billion every quarter, $4.5 billion a year on average, if you want to stay in business in 10 years' time, right? They need to be selling way more cars than they are today. Now, we're busy sitting around. We've got these car companies around the world. Honda's saying it, other car companies are saying it, saying all these Chinese car companies are going to go bankrupt. They're all selling a lot more than this, though. Yeah, they're all selling a lot more cars than Rivian is. I mean, to be honest, Xpeng, one of the smaller car companies, Xpeng CEO is, very concerned. He's mentioned this before about Xpeng staying in business. He's like, we've got to try and be one of the 7 that stay alive. We've got to be it. He's really focusing on this. He's open and public about this, right? And here's the thing. They're selling, what, 45,000 cars a month. Yeah? And they're still not quite profitable yet either. Rivian's selling 4,500 a month, 10% of that number. So, yeah, Rivian's not even close to holding on to this dream of still existing. Personally, I think the chance of them surviving beyond 10 years is no more than 1%. Guys, I've got to make very clear. I love Rivian vehicles. Would I love to own one? Absolutely. I love their pickup trucks. Absolutely love them. My dad loves them. We both talk about, it'd be great to own one of these. They look cool. They're great. I wish we had them in Australia. But you got to remove your emotions from this. Emotion is not about investment advice. Money and emotions don't mix well. They don't mix together. They're not meant to be together. That's why most people who invest actually lose money.